Hey folks, in this quick video, I'm going to actually show you what I look for to make trades in the trade room and for myself for the fund. I'm going to go over really it's a training thing, and this is what we do in the trade room. I show them what I'm looking for. I kind of train them how I trade. So this is IWM. We've already made a fantastic trade on it. When it was coming up here, we actually took the 261 puts, and from there it dropped all the way down to the 258. I closed it a little bit early, and I'll show you why. But in any case, we are able to take we have the 260 calls and the 259 puts because I wanted to be hedge on this because we could head down or we were most likely going to come up and take out these highs. And this is what I'm going to explain why. So here you can see we made the highs, we dipped down. Now, what I want to concentrate on, I'm going to shrink these down right now so I can make this a little bit bigger, is we want to look for divergences. So this is our duration indicator. And you can see we're pretty stretched out. So the odds of us coming down and closing this gap in the next couple days, or say week or so, give it some time, are pretty high. Just because we have a lot of duration left. Typically, when we have these types of when we're up at these levels, IWM will go from. I'm just going to do the numbers here. So 250, 254 down to 244. So it's about 8 points on it. Right now, we have IWM that's up 7. So it doesn't mean it has to come all the way down, but what we're looking for is once this guy gives us a cross, we're going to look for some type of move down. And you can see it right here. And again, this is a 15-minute chart. So you can see that from here, we have IWM that went from 251 down to 244. So 7 points. So typically on this chart, when we get our duration cross, we get anywhere from a 5 to 7 point move. Now, this is another thing I want to point out. So you can see when we had this gap up, notice the oscillator here. This was the highest peak right here. So this drop right here, it was giving us a buy signal. And the reason why was we there was no divergences. So once we got up above this high right here, this was our bearish divergence. And from there, you can see we had sell signals going on, and we can see them in this area. And that's when we had that big drop on IWM. But here you can see this is when institutions were buying. They were buying this entire dip. And that's when we had that massive move to the upside. So let me show you why I took the short side. So, well, I'm going to get back to this. So again, here's our initial burst up. We came down, and then once we made these highs above it, that was our bearish divergence. We got our duration cross. You can see institutions were selling, and that's when we had the big drop. So now we don't really have, you can see when we made this high right here, this was the high. So the odds of us taking out these highs right here are pretty good. And that's why we're in a straddle with the 260 calls and the 259 puts, because if we break above here, I'm going to show you what the next target is. And this is what I talk about when you build a framework for trades. So here we don't have any divergences. So the anticipate, oh, I'm sorry, what am I doing? Here we don't have any divergences. So the odds of us taking out this 260, 258 are pretty high. And if they get above it, what we're going to look at is where is the target. And you can see this is the reason why I took the short trade was we came right up into our secondary right here. And from that, look at what happened. We had sell signals this entire move right here. So to me, I knew it was going to be very difficult for the bulls to continue to push through this. And if they do, really, this is since I'm showing you that we don't have any divergences and these highs will be taken out, what we want to look for is what's the next resistance. And you can see it right here, and that's 264. So that's actually going to be my upside target if we get through here. And it may not come until tomorrow. We have to keep an eye on it. But in any case, I do believe that we're going to come up to the 260, 279, 80 area or test these highs. But again, we have sell signals. So that's given us an idea that at some point we're coming down and we're going to test this, the 253.63 and close this gap. And it may be sooner than we think. We'll have to see. There's a lot of momentum going for the bulls right now because of the ceasefire. But as I explained in the room, it's institutions are looking ahead, and they're not looking just 2 weeks ahead. And there's a time period on this. So as much as everybody's saying we're making it to new highs, which I do believe we are, I don't know when we're going to do it, but we will be making new all-time highs. I don't think it's going to be in this 2 week time period, just because institutions are going to start selling like they are right now, because they're not going to go through this again, hanging on to positions all the way at the highs, when we there's a 2 week window when we can be in the same situation as we were yesterday. So this is the reason why I took the put position. Again, it was a great trade. I got out of it a little bit early, but you can see it went down to the almost to the support right here, almost to the penny of the 257.86. But we made good money on this one. I think we made like $600. And again, this is all in the trade room. This was one trade that we made. It cost the total trade I think was $1,000. So we made 50% on it in a few minutes. So 15-minute chart again. I'm looking for us to make new highs. Now, another option on this is again what I try to train people in the trade room. It's not just making trades; it's teaching you how to trade. Is this is either an A, B, and we're going to make a wave C, which will I could even measure that out for you and let you know where it would be. So if this is an ABC move, then what we're looking at is a target coming down to 257.35. So taking the 259 puts and the 260 calls, if we come down to this target 257.30, it's going to be able to cover the call position on the put side. We'll be owning that for free, and this is just a continuation. This is just a, let's say, consolidation before these highs will be taken out. So that's that on that part of it. Now let's take a look at a 5 minute chart, and I'll show you why I got out of the put position a little early. Was notice that there was buying this entire time here. So we have buying here. You can see that we had the cross. This is when we the whole reason for this for the short setup was, one, we were at the 60 minute at the secondary distribution zone. And two, it's the law of retracement, meaning that every move that we get, whether it be a big move to the downside or the upside, it's going to retrace. And you just have to figure out, where is it going to retrace? And what we look for is selling from institutions. Where are we on duration? Do we have divergences? And right now, like I said, my take is that we're going to come up and we're going to at least test these highs, or we're coming back down and coming down into that 257 30 area or lower. We have to wait and see on that. But you can see right here our buy sell pressures heading down. We had a sell signal. We're at the top, but then when we look at the 5 minute chart, you can see that we actually had some. Well, we have selling going on right now, but we had buying at the exact lows, and this is a lot of buying right here. So I'm actually willing to almost take a little bit off of the call side, because we already own the 261 calls, which we took with the 260 puts on it. I always run with a hedge position, so I may take the 260 calls off. They're probably plus 500 $600 in that range, but the puts that we have are off. So we're not going to be up that much. But if we continue higher, then we're going to make money on the 261 calls. So right now, I'm just holding them. If I see a lot, if I get a sell signal like this, that's where I will take it off. But right now, if we continue higher, I believe we're coming up to the 262. So really, the way that you do this is, one, do we have a divergence? No, this was the exact high we made. So that's telling us that the odds of this high getting taken out are good. Now you can see duration flip. So now that was where we started getting selling, and you can see that there really wasn't a whole lot of selling when we were up here. That's why I was looking at this as just a trade, because we didn't get a whole lot of selling when we were up here. So it was, just a trade, and we covered it, and now we're long and short, and you can see we're getting some sell signals. So my options will be, one is that if it pops up, just take the 261 puts and leave the 260 calls as well as the 261 calls, and let it ride it up, and we're hedged on the downside. Or I can just take the 260 calls off right now, basically own the 259 puts for free, and still have the 261 calls. So this is it. So right now you can see we're getting a little bit of selling. We're have a little bit of a divergence going on with our duration, just the indicator on it, but we don't have any divergences on our oscillator here. So I still think if it's an ABC, I'll be looking to close it somewhere between the 257.30 down to the 256. That will definitely cover the call side on it, and that's all I'm looking for on this. And if we head higher, then I'm going to be looking to close it at the 263, 264, and we'll make great money. And that's really the way this is. You want to look at it at all different time frames. And if we even go to a 2 minute chart, this is a really good chart for if you just want to make some quick trades where you're going to be in and out. And again, you're not when we had this big move up here, you can see that we don't really have any divergences right now. But look at our I keep looking at the wrong chart. I'm at the wrong part of the chart. Okay, here we go. This makes more sense. So you can see we don't have any divergences, but look at we had selling, and this is kind of where I think I covered it a little bit below it, and it went a lot further down. But in any case, again, you can see selling. So if we get a pullback, it would make sense right now because one, our duration is flat. Two, we don't really have much buy sell pressure spikes. And three is we have a sell signal on our 2 minute chart on the liquidity indicator. So this is how easy this is. Like I said, a lot of the stuff I do is not rocket science and it's not voodoo. It's simply looking at what the institutions are doing, and that's why I'm saying I would not be surprised to see a pullback down to the 260, possibly even down to the 259.60. And from there, if it keeps going, we already have the 259 puts, so we're going to make money on that. But if it heads higher, which I wanted to do, then we're going to make it both on the 260 as well as the 261 calls that we have. So my gut is I want it higher, but I'm going to let the institutions tell us what to do. And if I start seeing a lot more selling, I'm just going to take the 260 calls off and run with the puts. And if we head down, then we make money on that end of it. So this is really what goes on in the trade room. And it's not just here, take this trade, take that trade. You're looking at live charts that I have, and one I'm teaching you how to make these trades. And on top of that, you have an indicator that is pretty amazing where it tells you what's going to happen before it's happening, meaning that we have sell signals right now. So seeing a move down would not surprise me one single bit, but I'm hanging on to the call side with it, and that's it. And we're going to make money right now. I believe we're up almost $900 just for the day. So again, this is a room that right now I'm giving away with this software for 1 year. But you don't really find trade rooms like this that are active that are $79 a month. It just a lot of them are close to $300 a month. So we are moving it over. Again, take advantage of it. I want as many people to own this software as possible, and that's why I'm leaving it for right now. We have a bunch of big promotions going out, and once they're filled, it's you're going to have to pay the $79 a month. But right now, you're still going to be able to have the software and be able to see what institutions are doing on both ends of it. So hopefully this helped you. If it is, click on the link, get the software, get in the room. You could have paid for the software 3 times over already just today. Yesterday would have been 3 times over. So if worse, just get into the room and learn how to trade. So with that, good luck trading today, and I'll talk to you guys later.